So here we have Tina has changed her name to Tiara. Quite interesting. Tina for a long time stood for, and still stands for, I guess, there is no alternative. And what does that mean? Very simply, there is no alternative to the stock market. If you're an investor, I guess back since, I guess prior to 2022, or at least midway through 2022, most investors would tell you, if I'm going to invest money today, it has to be in the stock market because interest rates were so low that putting your money in a traditional GIC, a bond, something in the fixed income world just didn't pay enough. It didn't even keep up with inflation, but earning 1-2% really wasn't enough for anything. A lot of seniors, a lot of individuals in general, whether you're older or younger, they use investment vehicles to provide an income for them so that they can use that income to pay their bills. Well, when interest rates are 1-2%, it's just not enough there for you to take home after taxes, of course, if it's outside of an RRSP, to be happy or satisfied. So TINA was an acronym that many individual investors came up with, and that stood for there was no alternative to the stock market. If you wanted to make money, you had to be in the stock market. And I think that's really what drove the stock market over the past decade, that there was no alternative to it. So anytime the market fell, money rushed in and bought up the market. Well, as you can see on the screen, Tina has now become Tiara. There is an alternative reasonable alternative. So there is another reasonable alternative, and that is now the bond market or GIC market. Other than GICs, because GICs are not flexible. You buy them, you got to hold till they mature for the most part if you want to get the higher rate. There are cashable GICs, but they pay a lot less than the GICs that you see in the papers or online or you hear about that are paying 4.5%, 5%. Those are non-cashable ones. So there is another reasonable alternative, and that is fixed income, because you can get 4.5%, 5% on low risk bonds, low risk GICs. And that is now competing for investment dollars. You see, when you buy a stock, let's say of a utility, for example, or maybe even some sort of low paying, dividend paying pipeline, paying 4 or 5%. Well, why would you want to take on the risk of owning that stock, that pipeline or telecom, for example, that's paying 4 or 5% dividends when you could get pretty much the same rate if you own something in the low risk area by owning a bond? So many individual investors will say, you know what, I'm going to take my money out of the stock market and put it into the bond market and make the same rate. Now, of course, if you're buying something that's also going to give you growth, that's a different story. But for those that solely are trying to get the best rate or income they can, then now there is an alternative to buying the stock market. There is a reasonable alternative, which is what Tiara stands for, and that is the bond market. So we're seeing the stock market feel the pinch, if you will, kind of feeling as though, well, I was the best and only game in town. Now there's a competitor on the block, and that is the fixed income market. And it has had an effect on the stock market. And as interest rates continue to move higher in the US and here in Canada, although we've seen a pause here for now, but if we move higher again, I think this will definitely compete for investment dollars going forward. However, the last thing I will say is make no mistake about it. Inflation rate is still roughly 6%. So even if you're still making 4.5%, 5% on a bond or GIC, you're still not keeping up with the standard of living or the inflation rate. So if you're looking for growth, I still believe you still need to be in the stock market at some capacity. But definitely, fixed income market is providing another option for everyone's hard-earned dollars today.